Right. So welcome to the weekly meeting. And in this meeting, we're going to talk about how you can frame or make your model, in trading, using the same way I trade and like the same way I'm teaching you guys anyway. So what you need to do, you have to ask yourself, what market structure concept do you use? Like break of structure, swing high and swing low, premium and discount, right? And number two, what kind of point of interest you use, like the fair value gas, other blocks, and all of this, right? And three, what confirms your entry, like market structure shift or just normal liquidity or something. But all of this, we're going to put them together to make it make sense to everyone. What invalidates your setup? So invalidate we mean, like, for example, when I set a stop, or if I don't have a stop, or let's just say I have a stop, I set a stop, but at the same time, I don't want price to go below or above some level, even if it doesn't hit my stop loss yet. So once price start to go above that level or something, okay, I will just take my loss short, like I will cut it short. That means this setup is invalid anymore, because if the setup was valid, I wouldn't expect price to come all the way to this level. Do you understand? And again, like I always say, I'm going to remain the same. I will encourage everyone to choose one or two pairs, precisely the one you prefer to trade, the one you like the most. Then you use your like analysis from higher time frame as your directional bias. Could be the daily or the 4 hours. The lower time frame for execution, like confirmation of your like market is going your way, or like your bias or something, you know. So this is how we are going to, and this is what we're going to discuss in this meeting anyway. And if you have any question, like outside of this, you can also ask, and if you have question regarding this, you can also ask. So like I say, you can start from the weekly time frame. Now we have previous week from this high to this low. Mm. This is the weekly time frame from this high to this low. You can see a lot of bullish momentum before last 2 weeks, like created some bearish momentum in either ways. But now, looking at this price action, you cannot really tell, oh, market wants to continue going higher or it wants to continue going down. Because for market to continue going down, you need to look at the structure from the daily and the 4 hour to see where we are facing and what kind of level we are respecting and where we might likely to draw to. So for you guys, I told you guys I would like 3,500 level. That is just my preference. It's not like, oh yeah, that is where the market is going right now, but I would like market to come to 3,500. And of course, market can just decide to, like, okay, I'm okay. Remember, this market can do whatever they want if they feel like at this point fair value has been offered, like market is like in equilibrium. you know Equilibrium is just a state whereby buyers and seller agree on price, right? So this market can continue bullish if it feels like, if they agree on like price right around this level, so price can continue going higher. That's why, like, you cannot really, like, oh yeah, market is going bullish now or it's going bearish. Yeah, market structure can also tell you that, but like at the same time it can change for some reason, fundamental reason or liquidity reasons. So this is how market works. Now we have previous week high and low, and we have like overall liquidity pool high. And of course, remember, these are all highs and lows, which also represents a major liquidity. We're not talking about the overall high now, just previous week high and previous week low. It's major liquidity. Now, looking at this price action, right? Are you a person who just go down to a 4 hour to look for a structure and just follow that structure, or you are the kind of person that look at structure from a higher time frame perspective. That is for you. Now, this is previous week high and low. And with the market structure we are seeing here, you can consider this to be a high. I will use a different color. And you can consider this to be a low. So now, let's say if this is your high and this is your low, and price wants to respect this structure. You guys know this is a structure, right? You can say break of structure right here. Structure break. Now, if price wants to respect this structure, and we are kind of seeking liquidity every time, right? We are seeking liquidity every time. Now, it depends what kind of liquidity this market is really looking for. Remember, the major liquidity from the weekly time frame, this is the weekly high. So price can take out this high and reverse from here and keep going down. What does price just did? It took out previous week high. Now we can be expecting price to come down to previous week low, or probably continue going lower, because we have other kind of lows that haven't been targets yet, that haven't been taken. All of these lows, it's a lot, here. So price can just do like this. And we looking at this current week, we have a structure from the daily time frame which we are looking at, and market moved from one liquidity point to another liquidity point. Now the question is, are we coming for this previous week high to continue going down, or are we okay right here where we at right now? This is it. We don't know. But as soon as we go down, we can also see what the market is doing. So on Friday, how did price close? Now we have a strong bullish engulfing into what? This area that price didn't take out previous Wednesday low and Wednesday high. Thursday didn't do any of that. But what happened on Friday? Friday took both highs into this area and failed to break above and rejected close below. So looking at price action real, right? This is telling you that price is respecting this level. This is telling you that price is respecting this level. You can see how price trades through it and come down. Did any of you catch this trade on Friday?
I saw it, but I was scared that I jumped out of it again.
What?
I saw it, but I jumped out of it. I kind of didn't take it.
Okay. So
I
before we continue, this was on Friday. We took out those highs, both highs. Let's say you went to the 1 hour, right? For example, here, let's say you went to the 1 hour right here. You can see how price move all the way down, right? This was a shift in market structure right here. I mean, like, not everybody can see it, but that was a shift in market structure. And again, you have multiple area of shift in market structure. Like in this 15 minutes time frame, you can see right here. So, like I say, this meeting, I want to expose some things to you guys, not just, I mean, you guys might know this already, but you have to apply it to the way I'm showing you guys, like, okay, once price take a high or something, go down to so time frame, and you can start looking for something. So again, let's go back to daily time frame. We know this is the daily, right? If price break above a level, right? It doesn't matter. Maybe it could be candle or structure. We know candles are structure in some time frames, like lower time frames or something. But let's just use like the word structure, right? If price broke above a high or below a low. How do you know it's a liquidity grab or it's a break of structure? Do any of you have idea?
Liquidity would be going into taking a swing low or a swing high, or price taking going into imbalance, and then wicking, like creating a wick on the candle and coming straight back out, or filling a, a gap in price, or taking out relatively equal highs or equal lows. I'm guessing, is that liquidity as opposed
So
from a change structure?
it's okay. It's the same, right?
Mm.
It's the same. So this is what I'm telling you guys, right? Every time price break a structure, whether it close, for example, let's just say like this right here. So we close below this structure, right? We don't know if this is a break of structure or just a liquidity grab. So for me, I always identify it as a liquidity, and it is a liquidity. The only way that it will become a break of structure is, for example, if this high is being respected. Like now, you can notice that price is pulling back up, right? If price respect this area and continue, or respect any of this area and continue without breaking this high, this is when it validates a break of structure. So now, what are we doing? We took liquidity from here, move back to some kind of internal liquidity to push price down. So if price invalidate this, this is when you know this is not a break of structure, it's just a liquidity grabbed, and we are coming for other side of the liquidity. It could be more or overall. So the short-term highs or low created that swept or break above or traded above or below a swing high or a swing low confirms a liquidity, not a break of structure yet. The only way it will become a break of structure if when price respect or that structure is intact. That short-term structure, that internal structure is intact. That is when it becomes what? A break of structure. Now, you heard me say like change the state of delivery, right? Because that level was the last point where price moved past liquidity. So if price has to continue up or down, that price has no, it doesn't have to be disrespected. It should be intact for price to keep on going that the same direction. Do you guys understand what I'm saying here? Again, this is a step by step, like when price takes liquidity, when price trade above a previous high or below a previous low. Now, what is previous high, previous low? Like I say, you can use swings or candles. Like you are trading intraday, right? You might be using candles. That's why I'm like implementing this trading way for you guys, like to make it simple. Just look at candle highs has been taken, and what is above there? Like the market has reached a liquidity pool, which because it's traded above highs or low, where stops are resting, right? That alone doesn't confirm a break of structure. It doesn't matter if price close above the wicks. It doesn't matter. That is just liquidity. Liquidity has been taken. Now, the next step, the next move determines everything. That internal structure, it could be low, it could be high, that traded below or above that high is what matters. That is what confirms a break or liquidity. again, this high was taken. You can go down to the 1 hour, or it doesn't matter which time frame you will go, right? So now, like I always say, I have like different eyes. I don't know how you guys train your eyes to understand structure or something, right? So I see two different break of structure right here, or shift in market structure right here, which is a disrespect to, to this last swing, right? This was previous day high that was taken right here. Now, this alone is a shift in market structure, and this alone as well is a shift in market structure. So you can use the body right here. Forget the fact I use the wicks or something. You can just use the body. This tells you that this is a change in state of delivery. These two right here. So automatically, you already know that price has shift structure right here. Right here. You see how price balanced that area later on, rejected and pushed down. Now, New York or whatever, or what is it called? New York was about to open, price move. Now we now target the session liquidity. As soon as price target the session liquidity, where was it? Right here. This is the last area. Price used to push high to target this liquidity, and here becomes double POI, fair value gap, and this area. If price is going to respect your structure, the last area that took out liquidity or something, price shouldn't disrespect that level. Price should not disrespect that level. That is what confirms a break of structure or just a liquidity grab. So the reason why change state of delivery or market is just a liquidity grab is because if price was going to continue going higher, like a break of structure you call it, price shouldn't disrespect that internal low or high that was created before a low or high was swept. It doesn't matter whether you are using this concept for just candle to candle or overall structure, like swing structure, like a bigger time frame structure or something. It's the same thing. What happens in bigger time frame happens in smaller time frame. So for you to trade intraday, that is why I implemented, if you are to trade just a single 4-hour candle or something, it's enough for you. Now, have you built yourself around a system that allow you to trade some certain ways? You don't know. If I am trading London session, right? Where is London session? This is London session right here. Yeah, this is 6 a.m. London session, right? Now, let's analyze this candle right now. This candle right here. Let me mark it out. Let's analyze this candle right here. The same thing. Just watch me step by step. So what happened? We have previous. It doesn't matter whether I or low. Previous day, last 4-hour candle, right? Then, no, not last 4-hour candle. Like the same day, but like during session, Asia session. So we have this last 4-hour candle before London session open. So this is basically like Asia session, those two candles. So we display to the downside. Now, what are you looking for? We see the high and low. Now, we see price traded above the high, but not the low. Let's just watch. So if you are to trade just one single 4-hour candle, so what happened? Price opened right here. It traded high above what? This candle. So this is when you want to be looking for your entry. If price wants to continue going down, like I say, you are using just this 4-hour until it closes, you are done, right? Now, let's look at, where is it? So basically, this is when, yeah, right here. This is when price disrespect this level right here. right here. So now, looking at the 15 minutes time frame perspective, right? You can look at this market like, okay, if this market disrespect this high, where is the shift in market structure? Right here. This is the change in state of delivery. Now, because this is the last low that took out the high. Then price moved down. What happened again? Price now take out that same high right here before price took out this low again. So now you have what? This structure right here. This is London session, by the way. This structure right here that you need to focus on right here. Right there. So this is basically a market structure shift. So if price was to continue, price shouldn't disrespect this low. Like I told you, the first one, what did price did? Price broke above that high. Price retraced back down. It didn't disrespect the low. It respected this area. It moved to the upside, took out the high. This is now confirming, for example, something like this. This is confirming a bullish move, for example. Now, price now came back, but failed to respect this low. It broke it. That is basically your change in state of delivery, your market structure shift. If you were to enter this trade, maybe let's say from this fair value gap right here. Let's say from this fair value gap right here. At what time that 4-hour candle closes? Let's go back there. It did close right here, but when market opened, it also traded down a little bit. Oh yeah, this is when it closes. So when price opened, it moved up, traded down. I mean, if you catch this trade here, it might give you a little bit of profit, but there was no much liquidity around this level to push the price down. That is why when New York opened, we came for more liquidity right here. But remember, the overall high is still intact. We came for more liquidity. Then again, price moved down, moved higher. Now we have a shift in market structure. But looking at the 1 hour, if you're looking for, like, for example, let's say a previous day high has been taken and you want to follow like the daily structure or something, that you have to know which candle you are trading. And if you are trading like the daily candle or something, like with the same process, you have to know what time frame to look for your entry. And if you are just trading the 4-hour or 1 hour, you have to know which candle and which time frame you are looking for your entry. It's just basically the same thing, but you have to build your system around either the 4-hour candle, the daily candle, or the 1-hour candle. It's just your choice. And what that means is, like, when you are going down to a lower time frame to look at your entry, you must know where to target. If you are only trading that 1-hour entry, that like 1-hour candlestick that gave you the entry, as soon as it closes, you are done from the market. You are good. Even if the next 1 hour is going to continue that direction, that is not your trading. That is not in your trading plan. You just have to follow what you have and what you understand, what you have like mastered. And again, there is secrets to all of this, right? Your time. The time is very, very important. Your time is very, very important. If I am trading New York session, right? If I'm trading New York session, I know where to come on. And I know exactly the candlestick that I'm looking at. I'm not looking at every candlestick. I'm just looking at some candlestick, basically. So, and I also know when to come to the chart and look for what I'm looking for. You see this candle right here is a 4-hour New York session candle, right? 14 o'clock. I don't know what it's like. What 9 or 10 o'clock New York session or something like that. I think so. So if I am to trade just this candle, right? Just this candle, I'm okay for the day. Just this candle. And how would I approach this candle right here? So I know I'm trading this candle alone, right? Every time I'm looking at my market, what do I want to see? I want to see a sweep and price give me a setup for me to get in and, ride the trade, right? Now, before this candle, we have a sweep of this previous candle. Before this candle, we have a sweep of this previous candle. So looking at the 15 minutes time frame, what do you have? You don't even have so much information because, yeah, we know this candle sweep this high, and now price pull back, price move up again. This is just a shift in market structure right here. But me looking at where is the candle again? Right here. This is where the candle opened. Like the candle I want to trade mostly. One candle literally can change everything for you. Just one candle. This 4-hour candle that I labeled out, there is something it did right here. Looking at the 15 minutes time frame, this is where the candle opened. This is the candle open right here, 14 o'clock. So if I am to trade just that candle, that 14 o'clock candle, I know what to look for. And it's the same thing I showed you guys. Because it is the 4-hour, which means as soon as it opens, my interest is in the 15 minutes time frame. And what am I looking for? A sweep of a candle. So this is where the candle open, we move aggressively to the upside, we sweep the previous 15 minutes candle as a form of liquidity. Whether we broke above it, we did it doesn't matter. But that alone is liquidity because any trade above a high or low is a liquidity for me, right? Now, right here, what I will be looking at is a change in state of delivery, the market structure shift, or it doesn't matter, right? Price take out this high. You can see it closed right here. Price traded again up, then move down. If I go to the 5 minutes or something, let's just say 1 minute or something. Now, this is what I mean because we were in the 15 minutes time frame anyway. This is the area, this market open right here. Price traded up, and this is the level as well that took out the high. You can use from where it opens, or you can just use this little internal structure. This kind of structure, you must practice. You have to see them. Like the people have taught how to trade or something, they know. I classify just one candle pullback. It can be a structure for me, Once price disrespect that level, it is a shift in market structure or something for me. It doesn't matter. So now what happened? We have this level that takes out this high. We have this structure, pull back down, takes out that low. Even if you don't want to use that, you want to use this low right here, this accumulation phase, before price move all the way up. And price came there, took out the area. Now, where is the high and low that did that? You can use this high and this low. This is just trading one candlestick. I'm not telling you the whole price action. This is just one New York session candlestick. Literally, it can change everything for you. This market doesn't require for you to trade all day, or just know when to show up, know the candle you are trading. And it has to be in session. You cannot trade outside of session, right? It has to be in your session. I'm urging you guys, focus on, just start slowly. One candle can change it can give you 1,000 pips either way when there is enough volume in that candlestick. You don't need to trade 5 candlesticks together or every candlestick that is printing. Just in a day, if it's just 1 candlestick you can catch, as it's more than enough. All you need is go down to the lower time frame and look for your entry, and that's going to give you a better risk to reward, right? Because you are in a lower time frame. Your stop loss, the risk parameter will be very, very low, and your reward will be very, very high because you are in a lower time frame. But all you need to do is to work your way through it. It could be the 1 hour candle I want to trade. It can be the 4 hour. It doesn't matter. That 1 candle can change everything. And the same trading style I'm showing you guys is the same thing you are going to use. Nothing different. Wait for liquidity to be grabbed. Wait for market structure to be disrespected, like a structure to be disrespected. Then look for a possible area to get in the trade. Like I say, this was an initial accumulation right here. We can say that fueled the move. You see price was coming down, and price created a clear structure from here to here with a nice displacement. And again, you also want to see a displacement. It's very important, right? So with this displacement, price has broken like multiple structure, right? And you can see price now move back to where? Either a fair value gap or just another block, which is a series of candle. For me, I always like to use the body like this. It doesn't matter how price consolidate. You know where to put your stop loss. And this is just that 1 hour candle, that 4 hour candle. You can move it this way. If your stop loss is here, like this, you are okay. Whether on top of this candle, it doesn't matter, but just like this. And you can target just that 4 hour candle. As soon as it closes, you are done. And if you don't want to maybe target the whole candle, you can target, like, for example, those kind of section lows or other liquidity, because section lows and highs, there are liquidity there, right? So you can see we took the high of Asia's London session. You can target the low. What is this? Low and what? This low right here. And you can just like go out from the market, whether here or here. You don't even need to wait for price to take like the 4 hour candle to close at all. Once you are okay with what you have, is this 1 to 5 or something, you are good. Because a lot of things, like, I think what is still like having, I don't know how to say, like, what is difficult for most traders is they want to catch every move in the market. They want to catch every move in the market. That is why I told you guys, just focus on liquidity sweep and look for your entry, right? Which means if price sweep like previous 4 hour sweep the other previous, like a 4 hour candle sweep the previous 4 hour candle, then you know, okay, now I want to be looking for entry. Like if it's that only that candlestick you want to trade, just trade it and leave the market. Remember, price will always take liquidity before a setup will form. It doesn't matter whether you are trading the daily candle or just single 4 hour or 1 hour candles. Before that candle will move, there must be some kind of liquidity that is going to be taken. Now, let's use this one for example. So this is, let's just say I want to trade the 15 minutes candle. Let's use this one and this one. Now, you can see how price took the low of this 15 minutes candle. If I'm only trading this 15 minutes candle like this that took out this low, then I know, okay, let me shade it. Let's go back to, I know when this 15 minutes candle closes, I'm off, because this is your model. This is what you are trading. You are only focusing on that one 15 minutes candle. You don't care about the next 15 minutes candle that is going to print. You build your system like this. You will see, like, you will be so profitable. Now, price took this low before price moved higher. Like I say, price always need to take some kind of liquidity. It doesn't just move. Even if it didn't take that low, before this candle move, there will be internal around this level that has been taken before it moves. Price always takes liquidity before it moves. All you need is to watch. Now, so let's just say price took this low. Let me make it bold. Right there. And this is the 15 minutes candle. Where did price open? Right here. Why is my laptop always doing this now? Price open right there. So now I'm looking to take just this 15, trade just this 15 minutes candle. I can go down to the 1 minute, right? Where is it? Right here. Remember, it's the same thing. This is a prime example. You don't need to trade for 4-hour candle or like just build your system around something. Now, at the time price took out this low right here, where is the internal low high that took it? Right here. If price disrespect this internal high, that is a change in state of delivery right here, right there. So you cannot look for some kind of point of interest. Oh my God, what is wrong with this? To enter of this trade. Now, where is it? Price created a fair value gap. Now, you can use this fair value gap to take your entry. If I will take this candle, this entry, I mean, this is just a 15 minutes time frame candle. Look, I put my stop loss whether here or this candle because you set your stop loss in 2 ways. The body, the opening right like this, or the low. You can choose this 2 ways. Now, where did the price closes? So we took the price from the trade from there. Price closes around this level, I think so. Let me see the closing price of that 15 minutes candle. Where is it? Where is it? Okay, right here. This is where price closes. Right there. Like this. This is where it closes. As soon as it closes, you are done for the day. This is 1 to 2.6. This is because you put your stop loss in the very low. If I have to set it like this will be like 1 to 5, right? And you are still safe just by trading only 150 minutes candle. The same, like I say, is the same setup. Everything. There is no trader on earth that doesn't have a system. That system has to work whether in a higher time frame, in a lower time frame, because it's the same system. What are you looking for? A sweep of liquidity. Then market have to give you a disrespect of like some kind of internal structure high or low that disrespect that traded below a low or above a low or above a high or something. And once you see it, that tells you price has changed from sell side curve to buy side curve or buy side curve to sell side curve. Change the state of delivery. So price wants to deliver to the other side. This is just a 15 minutes candle trading. The same, even if I want to trade the 1 hour candle, I'm showing you different example now. If I just want to trade 1 hour candle, if I don't see that setup, I'm not going to enter off that trade, right? So now, it doesn't matter which 1 hour candle we are trading or something, right? Okay, let's just use this last one anyway. It's very important for you to know when to take your profit, all of this, because your target should be like some kind of fair value or other block or highs and lows. Now, we took out this high with this candlestick right here. We took out this high right here. If I'm just trading this candle, I mean, it was almost closing before we took the price, like took the high anyway. So you can just do the 5 minutes. In the 5 minutes, we don't really have much information right here. But if you are, I don't know, like I say, we are different, right? If you are like me, I know what to look for. Because since this price action is long, right? I can do different things like this. This is a balanced candle, indecision. Look at how this, where is it? This one right here. Took out the high right here. I can just go down lower to look for some kind of, and here you can see price had disrespected this level right here. And this is the high, this is the low. What do we have? We have some kind of fair value gap around here. Then you can just wait, take the entry, and wait for that candle to close it. Where did the 1 hour candle close it? And he even traded even below all of this low, But it's the same system. You just have to know, okay, this is what I'm looking for, or which time frame I want to be trading, which candlestick, which candle time frame I want to be trading. It has to also be in your session. The most important thing. You can trade outside of session, it's okay, but let it be in your session. So you have more chances, like, to win that trade and like the setup to play out. You don't need to only one candle, like I say, is okay. Only one pair is okay. When you are looking for let's say the daily. So like I say, this is a daily high and low. Do you know how many days it will take this price to come to your other block or to come to your fair value gap or something? You still need to trade every day. That is why your concept, you have to work as well in whether 4-hour candle or 1 hour candle or 15 minutes candle. You see people who trade futures, they only trade 15 minutes candle down or 1 hour candle down. This is intraday trading. It's not just like you are scalping or something. It's the same setup. But you are just okay, this is the only candle I'm trading for the day. I'm done. Your system have to work. That is an edge. We are not like people who are waiting for price to come here before they can take a trade. No, that is you have to be able to take at least 2, 3 trade, 4 trade. If you want to trade every day, you can, but do I really recommend it? Make your money for the week and go off. That is why I'm preaching 1 to 2 good setup in a week, you are done. But actually, you can trade every day and every session. It doesn't matter because the same system works, it works. But you don't really need that headache. One trade, make sure you utilize that opportunity on that trade. There are some days volume comes in, right? Before that 15 minutes or 1 hour candle will close, bro, you are already running 500 pips, 1,000 pips. And why someday that same candle that you are trading every day can just give you 20 pips or 30 pips. Days are different, but your system remains the same. Days are different, but your system remains the same. That is why we don't really bother about direction. Yeah, overall, higher time frame direction is very good to know, right? It's very good to know. From the weekly perspective, we know price is still bullish. There is no way you can tell me price is bearish, right? Price is still bullish. These are just a pullback. But are you waiting for price to pull back to all the way here? Let's say for people who trade that block or something before you can take your buy? No. You can still trade every day, but it's the same system. And in a week, you have to have a goal, a target. So my goal or my target is just to get 200 pips, or it's just for me to get 1 or 2 good trades in a week. That is your preference. You have to have some kind of system, build a system around, for yourself. But it is the same trading style you are using to trade every day, day in, day out, every week, every month. The same system, nothing changes. It's not like you cannot lose. You can lose. You are losing, like I say, because price is seeking more liquidity. It's not because your setup wasn't right. I always say price can decide to go higher. You cannot stop it, because the primary objective of this market is to seek liquidity. So at the time of your setup forming, maybe there was not enough liquidity to move that price. So it has to go. It has to go higher or lower to get that kind of liquidity. It's not your system.
Hello, so Andrew, okay. When does someone know when to, like, when do I set in for break even or trailing my stop loss? Because such thing happened to me on GU trade, though I was trading off session in the Asian session. I just wanted to try it out,
Yeah.
and it was like a good profit. But when my candle closed, it went back and closed above my entry, and
Okay.
I was like, no, I don't have to continue. I don't know if I should share my screen so that you could just glance at it and
Yeah. You're going to share your screen. And again,
okay.
what did I say? If you were just trading just that 4 hour candle, the only two things that kills trader is greed and fear. Greed and fear. Now, because I don't know what time frame candle you were trading, it could be 1 hour, 4 hour, but now you want the other 4 hour to also go your way. Price is moving from one liquidity point to another liquidity point. The only way price can just keep moving like that is when the other party is like totally in control, like they overpower. Remember, these are the things you have to keep in mind. Like I always tell you guys, I also gave you guys the note. Price is only doing what? These things: seeking liquidity, efficiency, offering fair value. This market is designed to what? To seek liquidity and offer fair value, which means allow both parties to participate. Now, if, like, I don't know if you were buying that market or selling that market, I don't know. But in either ways, price go to one of the direction, you expect the other people to also participate. It's not just for one person. That is why you must build a system that works. Like, okay, I'm only trading this because this candle gave me this system. It's telling me that price is going down. So after this price closes, I'm off. I don't know if the next candle is going to continue or reverse, like give the other party a chance to participate. Because I'm not the only one participating in this market. It's not just one party, it's both parties. Those are the things you have to put in your head. It's always seeking liquidity from one liquidity point to another liquidity point. What about this has taken this low? Then the next other party, they are giving the chance, to participate, to take the other side of the liquidity. You have to know all of this. That is why I'm urging you guys. One, what is it called? One pair, it doesn't matter which pair it may be. Maybe the one you like the most, the one you love, like have a relationship with, and either one session, or you can trade both sessions. It doesn't matter. After all, if you catch one good trade in London session, do you really need to come back in New York session? You can just go out and do your things. If you still want to catch a trade in New York session, you can still do the same set of the same thing to catch a New York trade. But are you not going to live your life? You're still going to live your life. So one section, one trade, you are okay. One candlestick either way. As soon as you see that setup, it gave you that setup. Take it. So your profit could be like the next low, the next like previous candle low, or some kind of, look at the displacement depending on the time frame you are on. For example, let's just use this for example.
Also, Andrew, it's time and price as well.
I mean, it doesn't just move, it's time.
Yeah, it's time and price.
That's why I said
everything.
you have to know what time to come on. And I'm not going to give you that time, because for me, I know what time I'm coming on, right? Look at your sessions and look at, okay, how many 1 hour candle do we have in my session, in like New York session, for example? Let's say we have like probably like 4 or 5 1 hour candles, right? You can pick, I'm just going to trade one of these candle. You don't need to trade the 4 one hour candle. You just say, I'm just going to trade one of this candle. That is your choice. You know, even this candle right here, it's a lot of pips. If I have to go down, let me see the high. I can also show you. You see, it didn't take the previous candle high, but there is a candle that internal candle that this price took before moving down. So this is basically the high and low, right? Hold on. There. So now, this is basically there. Where did this? Hold on. Let me mark the closing price. This is the closing price here. Okay, here. I think it closed right here or this candle anyway. I don't know. But one of these candle, for example, now this is just the 5 minutes time frame though. So price was just moving around. You see here, we open, we move down, all of this. Those are just price action, right? You can still look at all of this candle, how they were taking like because it didn't take the previous candle, right? It didn't take the previous candle high or something. But here you can still look at all of this. We have this candle, we move down when it open, but look at this candle right here. Before this candle moved down, right? Look at this candle right here. It did take some kind of high right here. Let me use this other line. What did I do? Did I take out my indicator? Okay. So right here, no, we later came back to take out, like, for example, this high either ways right here. And this is where you can't be looking for your trade setup anyway. But I'm just going to show you something that everything is just the same thing, right? We took this high before we displaced down, price just came, moved down. But later, look at when we take out this high. That was still within that 1 hour candle. Look at when we take out this high. We created a low. Now we move higher. Now you can see this displacement right here, breaking this low. So this could be, for example, where you can take just that 1 hour candle before it closes, and you can just, it closes right here, right? You can just target this level where it closes, you are off. This is just like a minor trading, right? But you can you can trade even more candles, like you can even hold your trade to run more, but you have to be certain because once that other candlestick open, it was the 1 hour. Once, let me see right here. Where is it? So this is the first candle that I was just giving you an example with. You have to be certain once this other candle open, there is nothing like a shift in market structure, whether from that lower time frame perspective. This one just run down, but if you are in the 1 hour or something like this, you must make sure, okay, so we have this low and this high, that there is nothing coming for, like, it just like some kind of structure. Let's see, 3 minutes. Okay, something like this right here. This is much clearer either way in 3 minutes. You must make sure price didn't take out any kind of internal high or something for price to continue going down. That is when you can hold your trade. But once you see like, okay, price is breaking structure, because this is just like very, very lower time frame. I'm just showing you guys an example. But once you see like price started to break structure, to the other side, then okay, it's time to close. But why even going through that kind of stress when you can just trade only that one candle? As soon as it closes, you are off the market. Yeah, there are times you can hold your trade, but you are holding that trade is basically because if I was trading like 1 hour, right? It takes like 4 1 hour candle. Yeah, in 4 hour candles, right? So which means your 4 hour has to tell you the overall direction, even if you are following that 1 hour candle. So you will have confidence that this price is going to continue going your way, because the 4 hour must have taken some kind of liquidity. Let's say, as this one took liquidity, and right there, and you believe that that other 4 hour that move back into your point of interest and continue until that 4 hour candle closes, price will still remain bearish, because your 4 hour time frame told you that price needs to go down. That is the only time you can like hold your trade and keep on holding your trade. Just like if you have like a 1 hour candle and your 15 minutes, that 1 hour candle must have done something that will guarantee your trade to continue playing out in that direction. I don't know if you guys understand what I'm saying. Do you guys understand what I'm saying?
Yes.
So it's up to you guys to determine or have a system. Okay, I'm trading just New York session, and what candlestick am I trading in New York session? Right? That is your choice. So if, for example, the first 4 hour candle in New York session starts like 9, or because probably they were like London slash New York open 4 hour candle that is still trading. So you just wait for that candle to finish trading, and the fresh 4 hour candle that is going to print in New York session, that is the candlestick that you will be focused on. Just focus on that. So if that candle is going to open like 9 or 10, then every time, every day, you are coming into this market at like 9:30 to start to watch how price has been reacting, because your 4 hour candle that you are going to trade starts at 10. So you are now preparing yourself. As soon as you see, okay, the previous 4 hour didn't take or didn't take anything, that's not your problem. Which means as soon as your 4 hour that you want to trade open, watch and see what the market is doing, right? So if I have to trade like the next 4 hour candle, that means I'm just going to go straight to the 15 minutes time frame. So what am I watching in the 15 minutes time frame? The structures. So you have already identified the previous 4 hour candle high and low that traded into the time you want to trade. You identify it and you wait for price in the 15 minutes time frame to see what price wants to do. So this was the previous 4 hour. In this case, this was the previous 4 hour before my New York session time open, right? So it closes right here. And what candle I want to trade? I want to trade this particular candle right here. So where does it open? It open right here. I'm not going to look at the. I have already identified my 4 hour highs and low. This candle is going to sell? Again, I've told you guys before. Do you really think we need to come for this high before selling? It doesn't necessarily have to do that, because price is just looking for some kind of liquidity. Like I say, there might be some kind of internal liquidity around this area that the price is aiming for to continue to go down. If this liquidity is not enough, that is when you see price will come for the high to get more liquidity for the sell to occur. Now, price will open here on my 15 minutes time frame right here. What I'm looking at, okay, high and low of that candle. Now, what am I looking at? We have structure overall. We came down. Now we move higher. We now broke this structure. So which means price is telling me that price wants to go down now. We have some kind of fair value gap right here. Now you can also watch. At the time of the first 15 minutes candle, what did he do? He traded into this point of interest. And I swear, he didn't just trade into that point of interest. There is an indecision candle right here, which is consolidation. Price also took out the high with that first 15 minutes candle. This is also telling you, okay, liquidity has been taken. Are we coming for this high now? It's not necessarily. So what you are looking for right now in this range is a shift in market structure, basically. Change the state of delivery. So you can start working your way down, down, down until you find what you are looking for. So right here, we have this aggressive candle, whether the structure start from here. So you can just identify maybe from here. This is when you want to see a change in state of delivery. Then you expect price to pull back to some kind of area, because from here to here is the high. You can also just use this high either way. But here, the same process. The same process. Even if you go to the 1 minute time frame, you already have that liquidity sweep, so you can start monitoring, okay, where did we change structure, market structure or something, whether here or here. It's up to you. You will have to refine that to your preferred entry or something. Okay, so whenever I'm trading this candle, this is the type of entry I want to see, and this is the type of trading entry I want to be using every day. Just the same thing, but you can refine it to your own taste. I can use the other block. You can be using the fair value gap, and you can be using some kind of liquidity too. Because even within there can be liquidity that will be taken. Like, for example, this kind of highs before we continue going down. Highs before we continue going down. So some people just look for liquidity to trade from. Even if price has taken liquidity to give you a shift in market structure, they still want some kind of liquidity again to be taken before they go on with their trade. So you have to build yourself, like, should I be using liquidity, fair value gap, or just other blocks? After my setup is formed, where am I going to enter from? Liquidity point, fair value gap, or other block? It's your choice to make at that point. But for sure, you are trading that same candle, that same setup, and that depends on the session, whichever session you want to trade, that same session. That is how you can build an edge and work around it. I'm not here to say, oh yeah, gold is going to go up as soon as market open, or it's going to go down. But I'm telling you that instead of looking at price like that or something, you can trade every day, but you can choose which session you want to trade every day. But the same system is what you are going to be using. Because if you change from here to here, from this one to this one, you are not going to have, I don't know, consistency in your trading. No. You start by trading, even if it's the 1 hour candle or the 15 minutes or the 4 hour candle. It doesn't matter. Start like that. Just the same thing I'm showing you guys right here. The same system. You don't even need oh yeah, previous day has been taken. Yeah. Because basically, what does this do is your time frame alignment, right? So going down to a lower time frame even give you more better risk to reward. Yeah, if you want to learn market structure, yeah, we can do that. That is when you want to be trading, I don't know, should I say swing trading or something? It's not like we are scalper, you are day trader, but you are only trading session, just session, and you are trading, particular candles. If it's the 1 hour candle on this session I'm going to trade, yes, you are trading that. So like I say, this week on gold, because I'm only trading gold and GU for now, but I haven't even traded GU in a while that way. But yeah, for gold, we have some kind of major liquidity right here, because even if price wants to go higher, we are going to aim for this, right? Somehow. If price wants to continue going down, so this is what we are going to aim for. So this is our main liquidity that we have on this time frame now. Yeah, on gold for this week. So we are looking at, well, market hasn't opened, or what is going on here?
It opens at 11 o'clock. Indices do.
Yeah.
The other market opens at 10.
It's already 10 here.
No, that the currency market opens at 10 and then indices open at 11.
It hasn't started moving yet. Okay, so now we have major liquidity high and low. So if you go to the daily time frame, you can also see.
But then the clocks have gone back as well, don't forget, in the US. Or has it gone forward? I can't remember how it works.
No, forward.
Forward, yeah. I haven't seen.
No, it went back. We had an extra hour of sleep this morning.
Yeah. Yeah, JPY is open. It's just the currencies the currencies are open and the indices don't open until 11 p.m. An hour later.
So like I was saying, we have major highs, weekly highs and weekly low, previous week high and low. And we have on the daily time frame, we have a structure from the daily time frame which is bearish, right? Right here. We also break this one. So the structure that broke this structure right here is from this high to this low. So like I say, these are just, I'm not going to say heady, but do you want to wait for that? For price to probably coming to take out this high into this area before you will enter to sell the market down? You don't want to do that. You can trade day by day following what I just explained to you. After market closure, then you can now see where we at this point. It's not like you are just waiting for price to come here before. No, day by day, you take it. Trading any session of your choice and any candle of your choice. Just the same way I showed you, the same system. But now, overall, we have like a bearish momentum, like a bearish structure. I took out this low and of course this low in the daily time frame, basically. On the 4 hour, you can start reading the structure. Again, overall structure of the daily is here, the previous week high and low is right here. But on the 4 hour, the structure said that we are going higher. How? Because this last one right here got disrespected, like I'm saying, right? So for me, I know Jackson, you did ask one question like, am I using wicks or the body, right? Is Jackson still here? Wisdom asked question like, am I using the body or the wicks? I can use both. It doesn't matter. I use body mainly, right? But I can use both. So from here, you can see both the body and the wick. It tells us that price is going higher. But another thing is, looking at this market, price took out this high, failed to close above that high. But this is just the 4 hour, right? Now, where is the structure that took out that high? So looking at this, we can see right here. I mean, this is just the body I used, right? But if you want to use the wick, you can use right here. This is the area that took out this high. But usually, you want to go down to the 15 minutes time frame, because that is the most important time frame looking at this market. So I will not even bother to use. I'm not like looking at this current price action, because that was from the 4 hour. That was from the 4 hour, and you want to go down to the 15 minutes time frame. So the 15 minutes time frame tells you that this area, don't be disrespected, right? Should just continue going higher. Anyway, price came there, respect, move higher, but failed. Well, from here to here, broke that level. It's nice displacement. Now, what do you have? I mean, for people who use other block or something, you can use like this, you know. This is when you see price came here and delivered to the downside, basically because of what happened in the 4 hour. So for sure, 4 hour is still telling us that price wants to move higher, but what is also telling us is price move down to some kind of liquidity. From this liquidity point is when you want to know that if price wants to continue going higher or lower. Because at this point, price came here, respect this level and move higher, then came here again, broke below this and took liquidity. So if you go back to the 15 minutes time frame again, you can start looking, okay, when we did that, did we break some kind of high? No, because this is the high that caused that shit. If this high is still intact, price is kind of what? Bearish at this point. Only when price took out this high is when price is going higher now. Do you guys understand what I did?
Do you mind walking through that one more time?
So, hold on. So basically, price is bullish on this time frame, right? In the daily time frame, price is bearish. We'll go back again. Price is bearish. From here to here is our range. It's our range. But liquidity pool, we have these highs, but we also have previous week high and low. Some major liquidity. Plus these highs, right? Those are all major liquidity. But now, just looking at this daily time frame, price is bearish. Why? Because we broke structure 1, 2 to the downside. So this structure broke this one, also this one, this little structure right here. Price is bearish. Now, if you go down to the 4 hour, price is bullish. Why? Because price is bullish, but still inside our daily structure, our daily bearish structure. Price is bullish in this 4 hour structure, which means price is pulling back to some kind of, I don't know, area, liquidity. It could be this previous week high that price is now coming, or this overall high, before selling, or disrespecting this overall high, telling us that price is now bullish. Basically, that is liquidity. But for us to continue that way, the last high that did that should not be disrespected. The last low that did that should not be disrespected. Then we will know the bullish momentum is, is there. Even if price is bullish now, right here, right, it still doesn't matter because the overall daily or team price we get to that area, whether here or this kind, it doesn't matter, and disrespect that area. That is when price is leaving bearishness. This 4 hour can trade into this level, take out this previous week high and respect this level and give us a shift or change the state of delivery for continuation to the downside. But if you fail to give us a shift or change the state of delivery, which means price is now following this 4 hour, and as soon as take out, now we have still liquidity taken, form of a break of structure, but the low that we do that liquidity taking should be respected for we to know it's a break of structure. Otherwise, if the low gets respected, then this high that got broken is just a what? Liquidity grab. Then you will now see some kind of something like this for price to continue going down. This is what we have in this 4 hour, right? But in this 4 hour as well, when price broke above this high, price also break this level either ways, but not really here, because this is where price, the overall level came from. But all of these are internal. So it came below this area and started moving higher, but it failed to break above this high. So you could have gone to maybe 15 minutes time frame to see what price did right here, if price is telling you that it wants to continue selling or no. But looking at this 4-hour, you cannot really say that it's telling you that he wants to keep selling, because this low will still be intact. Price came there, react, bought up, came there again, took out this thing, still react. So like this is bullish, but in the 1 hour or 15 minutes time frame, you can see there is a shift already to the downside, even if price has not gotten to the destination. Probably is coming for this high or this area. We haven't got there, but in this 1 hour and 15 minutes, price is turning bearish to the original daily structure. Now, what are we looking for? This is just previous price action, because there is no new price action yet. But what are we looking for? This high is still very, very much intact, which means it is the high that started breaking structure to the low, to the downside. Now, if price will do something like this and break this high, it means that price is now kind of coming for more liquidity. So we can come for here, like this area, and do like this. Because this area, for example, will be the area that break above this high. So this area will become the valid area for us. And price will keep on respecting the structure like this, until you get to wherever it's going. Then fail to respect that area again, give us a shift, or respect that area, give us a shift. Then we know that price is now coming to the other side of the market. That internal short-term high or low that breaks overall high or something is very important, depending on of course, the time frame matters, right? Because these lower time frames are just like, a way to navigate, okay, what the bigger picture is saying, right? The bigger picture is bearish. Right now, the internal structure is bullish, right? Until we get to the bigger picture point of interest, whether the high, which is liquidity, or some kind of fair value gap, which is inefficiency being rebalanced. From there, what the market will do after that is what matters a lot, the next move. This is just people waiting for, okay, come here, I want to sell. But you don't necessarily need to wait. You can just wait for the day to begin, wait for your session to begin, and go down to the lower time, like let's say 4 hour, you want to trade the 4 hour candle and start reading, okay, what the 4 hour candle did. Instead of you waiting for, okay, we have a structure up there, market is going up, you want to buy. No, trade what the market is telling you to do. If it's the 4 hour, trade the 4 hour. Do you understand?
Yes.
Are you sure you guys
I
understand?
I understand.
The reason why I'm telling you guys this thing again, I will repeat myself. You don't have a system that works yet. Don't compare yourself to anybody yet. Try to build a system. And as soon as you start seeing the market clearly, just by trading one candlestick, it could be the 15-minute candlestick, it could be the 1 hour, it could be the 4 hour. That same system is what you will use even in the higher time frame. So your higher time frame, what it's doing is basically giving you a longer move, right? You get that same like that same entry and that same everything from a bigger time frame. So which means in your smaller time frame, you can just be riding the move towards that direction. That is what the bigger time frame is doing. you can implement that later. But for you to build that system, start with lower time frame, not like low time frame, like 4 hour, 1 hour, the intraday time frame, to build that confidence, that system that works for you. And as soon as you build that system, you cannot, like, it's done, man. You can use it from the 3 months or 4 months, 1 month, 1 week. It doesn't matter, because then you already have the direction, and until that month or that week finished, you are not touching your profit. Then you can use it to swing or something. But like intraday, don't focus on big move. Focus on building that system with just one candle. You haven't seen somebody who is buying, making money, then selling the next candle, making money, just doing like that. It's the same system, because the same thing works. That's why I'm telling you guys, just practice it with one section, one candlestick, one pair. It could be the 4 hour candlestick or 1 hour candlestick. It doesn't matter. 15 minutes candlestick. It doesn't matter. But try to work it this way. You must also know the time frames to look at, right? So if I'm in the 4 hour, okay, I have to go to the 15 minutes time frame to start looking for so and so thing. That will tell you that 4 hour area or something is valid. Until that 4 hour closes, you are not doing anything. Understanding? Do you guys understand? If you have any question now, you can ask before we go.
Okay, hello, sir. You said something about identifying the section you betray a person will be trading on in right, and I want to ask if trading in a particular session would it be determined by the volatility of the market during that time? Like
So
looking
every
at
session has like some kind of volatility, So like I say, some session, it depends on what you want to do in that session, right? There are some sessions that we can just offer consolidation. It doesn't mean that session is always consolidation. It's just that day. It's just that day, right? But it doesn't mean that you cannot take a trade while it's still like a consolidation session. That is why you have to focus on what you are looking for. If I'm only looking for me, if I'm looking to trade just one candlestick, it could be one 4 hour candlestick or one hour candlestick, then that is what I'm focusing on that session. No, whether the whole session is going to consolidate, that doesn't concern me, because I'm here to make my money from that my system, like from that candlestick that I'm trading. Do you understand?
okay, I understand.
So this will also build your discipline and your risk management, right? Then you will not have like fear of missing out, because this is what you are trading. This is what you are trading. Just that one candle or something. That is what you are trading. It's okay to look at the market structure from like bigger time frame perspective or something. That's just like overall direction. But is it just because it's overall direction, price cannot disrespect that direction? Of course, price can do that. That is why you don't really need to like think about this now, because the highs and the low is just liquidity. The highs and the lows are just liquidity. We see them as like, oh yeah, this is a structure. It's just a range, and this range is just a huge liquidity pool. To this upside, buy side liquidity, to this side liquidity. It's just a liquidity. This structure you are seeing is a range of that liquidity. So if market wants to drive like liquidity, so we are coming for the high, right? Which means here. And if it's down, which means here. It's just liquidity above this level and this level. below this level and above this level, it's just liquidity. So you can walk your way from here down to this just by trading each candle. As soon as it prints, you go down to your right time frame to look for, okay, if this price is going to revise more, or have we taken liquidity that this price wants to continue going down. Yeah, like even me saying you can trade one candle, it just means like, okay, yeah, if you want to be satisfied with that candle, you can do that. But if you also want to trade the other candle, you can do it just by looking at what the next candle is doing, right? You can also trade the next candle. But just to save all that stress or something, like you came here to make money. And one candlestick can give you that money that you came to make. Do you understand? We don't know how today is going to trade, but London and New York session we will definitely know. Now we have like, I'm not going to do like, we have like this low being taken. So usually I would like to, this is the first 4 hours. So we have 3 hours, just basically 4 hours left, right? This is it. And we have this first candle, this first 1 hour candle. So if I want to trade just this first 1 hour candle, this is the first 5 minutes, right? And this is the second 5 minutes. There is a way you can trade it. Just the same system I'm showing you guys. This is when it gets interesting. Some people will say, oh yeah, price took liquidity and price change structure right here, right? Which is okay. But for me, I will not look it that way. What about if price took liquidity here, he also came here to take liquidity? Is it not equal? But what I will be looking at is right here. If price will come and disrespect this high, so I would prefer to go long because throughout this 1 hour candle, I prefer to go long because it just tell me, oh, your price took liquidity from here and we are going the opposite direction. I mean, I will have to see some displacements, right? That's what I want to see. But yeah, the same thing. So which means I'm only trading just this first 1 hour candle, right? And it's going to close in like what? 15 minutes. But if price has given me setup before that, then I know the rest of the candle is going to go like this. That is basically what the market is doing. And that is the same thing I'm telling you. If it's just that 1 hour candle, as soon as you get that entry, wait as soon as it closes, or if you have like a fixed area for you to trade, like target or something, then you can do that. You don't even need to wait for that 1 hour to close or something. Do you guys understand? Because I need to go now. But see, you can pause the recording.